OCBC has made a $1.4 billion offer to take Great Eastern private, and this after some recent shareholder unhappiness about the failing returns of Great Eastern. Now, if you look in terms of share price chart, Great Eastern has lost around 30%, correct, in the last 5 years. And take note again, Great Eastern was once a $30 stock. This voluntary general offer is for the 11.56% remaining floating that OCB does not already own. And this offer of $25.60 represents a 36.9% premium over Great Eastern's last closing share price as of 9th of May 2024. Now, if you're a shareholder, you actually receive official documents no later than 31st of May 2024, and you have 28 days to decide whether it's an offer you want to take or not. So if you're thinking, Josh, are you also a shareholder? Answer is no and yes. No, because it's in my wife's name. Yes, because I bought it for her. You can see over here, she has 400 shares of Great Eastern, and I'll share with you why I bought it for her and when did we actually do so. More likely, you are interested in OCBC shares or you are an existing OCBC shareholder already. So today's discussion is to show you whether it's beneficial for you or not. If we see in terms of OCBC's latest first quarter 2024 results, you would see in terms of net interest income being flattish again. In fact, net interest margin has tailed down a little bit to 2.27% and net interest income has dropped slightly to $2.4 billion. This has been something I mentioned a few times on the channel, that net interest income could be at a peak cycle, could be again, no guarantees, and because for all banks, most of their income is actually from loans. For OCBC to be specific, it's about 2/3 of their total profits. The other 1/3 is actually non-interest income, and as you can see, these are the 4 key segments. The biggest contributor is net fees and commissions, but quite clearly, the biggest jump is actually in trading income, correct? This is something I observed also looking at DBS's latest results. I think this has some correlation to the outstanding first quarter that US equities actually experienced. And beyond that, the other biggest jump, which is also the third biggest contributor to non-interest income, is actually from life and general insurance. This is the yellow bar over there, and you can see quarter on quarter is massively rebounded, correct? OCBC right now is already a controlling shareholder of Great Eastern. They own around 88%, and this offer by OCBC is expected to be earnings accretive. Great Eastern provides diversification to OCBC's earnings, and it has contributed around $700 million annually over the past 10 years. This translates to an average of about 15% of OCBC's annual net profit. That means in layman terms, if this acquisition is successful, they can potentially put in an additional 1.5% more net profits if Great Eastern is fully owned by them. Coming to here, let me know if you have questions or not in the comment sections below. And as always, smash the like button so we can reach a bigger audience together. With that, let me show you some analyst remarks with regards to this acquisition. How about that? OCBC's offer to privatize Great Eastern values it at 0.7 times price to embedded value. Embedded value is how insurers are typically measured, and this is lower than 1.4 times that AIA is priced at. And to this analyst, it being below 1 times price to embedded value implies no value to new business potential of Great Eastern, since EV is the present value of future profits of policies already sold. Actually, I don't quite understand that. Never mind. As such, they feel that there are risks with this current offer that it might need to be raised if the deal is to conclude. To this point, I can add a further note also. Voluntary general offers like this is sometimes a first step. It may not be the final offer. Again, this is not financial advice, because I've seen before general offers being raised, being extended. There can be a lot of things depending on the market feedback on how much more they acquire. Do note, once Great Eastern crosses 90% in terms of ownership, they can choose to delist, and you don't want to own stocks of a delisted company. Going back to this analyst report, they mentioned that this deal is not cheap because the offer price is 1.5x price to book value. They are also unclear of the incremental synergies since OCBC already controls Great Eastern. All in all, they feel that OCBC is better off using their capital differently or returning it to OCBC shareholders. I kind of differ from it. That's why I chose to bring this up for discussion. They are saying that OCBC shouldn't acquire this, it's not a good move. I'm on the other hand thinking OCBC acquiring Great Eastern is pretty good a move. It's quite obvious that the insurance industry is depressed right now in terms of valuations. A quick analysis in terms of share price can see that they are trending downwards together, correct? And it's industry right. AIA is the dark blue line, Great Eastern is the yellow line, and Prudential is the light blue line. Everybody has been trending down in the last 5 years, so it's actually not just Great Eastern. AIA on the other hand has been an outperformer. As mentioned, AIA right now commands a 1.4x price to embedded value. My guess is because AIA has some Hong Kong business that is really right now experiencing unique inflows because of China money. But if we were to see Prudential, the price to book value and price to earnings ratio is about right now what OCBC is offering for Great Eastern. So to me, I actually think OCBC's offer is not overpaying for it. I'm kind of a bit hopeful that they might revise the offer and give a little bit more. Again, that's my own hope and my own interpretation. But let's draw back to the point on why Great Eastern share price is so depressed. If you were to see this chart over here, you would realize that Great Eastern was once $30, as what I mentioned, in 2017, and share price came downwards before having another leg up in 2021. Let me show you what exactly is experienced in Great Eastern's history of earnings. You would see, as I box up over here, 2 periods of peak performance. In 2017, where share price ran out of $30, and in 2021, where share price was in the mid-20s. But after these 2 periods, share price came down because profit levels came down. Again, AIA exhibited similar net income result, which means it's kind of an industry-wide thing. My guess again is in 2021, there was a lot of sales for universal life and leverage annuity plans. I even have a previous video on leverage annuity plans because that was the flavor back then. And because of low interest rates, people were able to borrow and buy really high premium plans. But right now, that trend has reversed. Interest cost is very expensive. Therefore, leveraging to buy these jumbo plans is kind of out of flavor already. All in all, I feel Great Eastern share price right now is unlikely expensive, even after shooting up. But I'd like to answer this question if you had in mind. Why was Great Eastern's share price so depressed, and why is OCBC buying right now? Is it only the reason of Great Eastern shareholders being unhappy? To me, I think that is just a small factor, but maybe the other factor could be OCBC had always wanted to privatize Great Eastern, and this can be seen in previous acts when it bought back shares of Great Eastern. Back in 19 June 2023, you will see that OCBC actually scooped up 2.3 million Great Eastern shares at $16.99. It is not the first time OCBC has bought Great Eastern shares, and when I actually saw that news, I went to buy for my wife on 20th of June 2023, as you can see over here. The transaction price I bought for her was at $70.72, and right now, of course, it has a 3,000 plus gain, shooting up more than 40%. The purchasing value was $7,118. Again, don't buy shares too small an amount, but I kept it this size because this was pretty speculative in my opinion, but I wanted it to also be a certain size that I can comfortably wait for a long period of time. Then you may have this question, Josh, why do you mention Great Eastern? Why do you suggest it as a share to buy? Now, besides being a low search topic, I actually think Great Eastern's books are pretty difficult to explain. Let me show you what I saw when I tried to do an analysis. These over here are big losses because of future value of TPL. My hunch is this future value is impacted because of the rising interest rates. But to explain this concept, I had no idea also. I also didn't understand why sales was dropping at such a big amount. And I wasn't really confident in explaining how the industry cycle actually works, even though I'm an advisor in the financial services industry. Great Eastern, in my opinion, is an outstanding player. They right now control the DPS pot. They are also one of the 3 insurers for Cashew Life. So for national schemes wise, they have a big reach and they have touched many Singaporeans' lives. That is a brand mode, but beyond that, explaining the books of an insurer is actually very difficult. Hence, I didn't create a video to share with you on it. Back to the point of OCBC acquiring Great Eastern, I actually think now is a good time to acquire. Great Eastern's performance can help OCBC, especially if net interest income is going to drop for the next few quarters ahead. So if OCBC agrees with me, hopefully it comes out with a better offer. Again, not investment advice. And what is mentioned by Great Eastern's latest result shows that the agency's sales has actually grown tremendously year on year and quarter on quarter. Everything in terms of new sales and new business embedded value is a leg up. And hopefully this could be a start of a cycle whereby OCBC acquiring Great Eastern now is a much easier proposition than waiting for the next few quarters ahead, whereby I believe Great Eastern could report even better results ahead. Hopefully you like this sharing, smash the like button. I'd like to introduce you to this previous video I had, which is how leveraged annuities actually work. Or if you've seen it already, check out this previous video where I touch on why I actually bought critical illness insurance. It's a heart-to-heart sharing that hopefully helps you understand how insurance plans should be perceived. With that, I'll see you there. Take care as always. Goodbye.